Good morning. Today is Monday, November 17th, 2014. This is Dan McElwee of Ventura Wealth Management, bringing you our weekly economic newsletter, The Profit Margin. We begin with our statistic of the week. Caring for friends and loved ones is costing more than an emotional toll. 47% of survey respondents that care for a relative or friend report paying more than $5,000 a year for health care-related costs out of their own pocket. 13% report spending in excess of $30,000. In our global perspective, we see that China is actively seeking to develop its Latin and South American relationships. It is estimated that China recently promised more to the region in loans than the World Bank, Inter-American Development Bank, and the U.S. Export-Import Bank combined. Our chart of the week shows that retail sales perk. Retail sales grew 0.3% in the month of October and climbed 4.1% year over year. Motor vehicle sales also saw a nice increase, up 0.5% for the month and 7.6% year over year. And now for our weekly commentary. Another strong week for equities was put in the books last week, with the S&P 500 and Dow Jones Industrial Average rising to record levels and gaining around 0.4% each. The Nasdaq was the standout performer, climbing 1.23% for the week and has logged nearly 13.5% year-to-date, much stronger than the majority of analysts had expected. Bond yields were virtually unchanged on the week. The 10-year Treasury ended Friday trading at a yield of 2.32%. While at times feeling like a broken record, we continue to focus on the health of the U.S. consumer, and not just because we like 50-inch LED TVs. The consumer comprises approximately 70% of the U.S. economy, and as such merits significant attention. Last week, the retail sales report showed continued gains, with motor vehicle sales being particularly rosy. The unemployment rate currently sits at 5.8%, but just as important, wage growth is barely keeping pace with inflation, running approximately 2.2%. Economists have long said that when the unemployment rate drops below 6%, U.S. workers should begin to realize higher wages. That is yet to come to fruition and points to the ongoing debate about the accuracy of jobs data. So what? This week is full of economic releases that will highlight whether the consumer is feeling the lack of wage growth. Housing will also be a dominant theme, all combined to lay a backdrop for Fed policy. Look for market action around Wednesday's FOMC report. In the week ahead, Monday, we'll see the industrial production number. Tuesday, the producer price index and housing market index. Wednesday, housing starts and the Fed meeting minutes. And Thursday is the busiest day with jobless claims, consumer price index, Philly Fed survey, existing home sales, and the PMI manufacturing index. Thank you and have a great week.